Hello and welcome everyone to our today's panel about revolutionizing in securities. For me, myself, my name is Abdullah Yildiz. I'm working at ECOTA as Executive Director. ECOTA is a non-profit organization focusing on carbon credits in the European market. And today we have got our guests from companies Moody's, Cashlink, also SWIAT, PVE and Dentons. And I'm also working besides of ECOTA as freelancer and crypto custody projects with banks. And it's also a very huge topic about securities. And that's also why I'm looking really forward to this discussion today. And I would like to give to my colleague Vincent, Jonathan, and please introduce yourself about your role, the organization, and how your company is contributing to this area.
Yeah, happy to do so. Thank you very much. So glad to be back, I guess. So I'm Jonathan. I'm a Chief Marketing Officer and Head of Platform Strategy at SWIAT. SWIAT is a company, actually a joint venture, owned by Decker Bank, Standard Chartered, and LBBW. And together they have decided to create a basically a unified ledger for financial transactions and to create a holistic financial infrastructure for the entire financial ecosystem, so that we decouple the use cases that we deploy on blockchain from the technology beneath it, and ensure that all of this setup is in a regulatory compliant environment. And we basically have been doing and working on this project since 2018.
Thank you.
Yeah, my name is Michael Duttlinger. I'm the CEO and co-founder of Cashlink. With Cashlink, we are a tokenization provider. We are leading the market with the most tokenization issuances in Germany. We are also a preliminary licensed registrar under the EWPG, Kryptowertpapierregisterführer. And we are operating as an infrastructure provider, B2B2X, and then enabling banks like Bankhaus Metzler. We also did one issuance with Deutsche Bank, Hagen or Bankhaus Scheich, to then issue crypto securities according to EWPG. And we're also enabling investment platforms to tokenize real estate, renewables, or collectibles. And we're also very active in Berlin regarding the German laws in the crypto space. So we are officially advising the German the Bundesfinanzministerium as part of the Digital Finance Forum. And happy to be here today and talk about tokenization in Germany.
Thank you very much. My name is Vincent Gusdorf. I'm a Senior Vice President at Moody's. Moody's is a rating agency, as some of you may know. Our job is to provide information to investors, and in particular, we provide information on debt securities. My role at Moody's is to head the research department that focusing on digital assets. About 1 year ago at Moody's, we decided that this segment was becoming increasingly relevant for investors because it created new opportunities but also new risks, and therefore we set up a team of about 9 people. And within this team, we have one half of the team that's in charge of preparing the rating agency for the upcoming transformation, and the other half that's aiming at providing information to investors about this transformation.
Thank you very much.
Hagen Weiss, I'm a lawyer with Dentons based out of Frankfurt. I'm a former regulator, worked for BaFin, the Federal Ministry of Finance, and the Federal Chancellery. I negotiated MiCA and the DLT regime, and I wrote Germany's first Electronic Securities Act, the EWPG, Elektronisches Wertpapiergesetz, and we contribute to the space by obviously advising our clients to be regulatorily compliant and getting their projects in a good space legally seen.
Yes, finally, my name is Tim Kreutzmann from German BVI, the Investment Funds Association. BVI is the representative of the asset management industry in Germany with about 100 plus members and roughly 4 trillion assets under management, trillion, not billion, the common mistake, English-German translation, assets under management. So anything we see under, like in the perspective of crypto assets in general, compared to traditional assets. So our benchmark will be what's the share of the cake compared to this 4 trillion. And this is, I think, one important aspect when you talk about market significance.
Yeah, thank you very much. So my next question is, how are your companies contributing to the revolutionizing of securities? What do you do there, and how is the outlook?
Well, I then assume we just go on again. Yeah. So on the revolutionary part, I would say what SWIAT is contributing to that space is in particular to have to think holistically. Right. So what we see is a lot of different use cases and different islands basically being created. Like, oh, there's one use case and here's one use case, and everyone is a little bit exploring. Back already in 2021, the World Economic Forum diagnosed a little bit of a collaboration paradox, right? Because everyone knows this is a platform-based business, so interactions are the ones that will drive this business forward. And if you don't allow for the sufficient interactions and create those synergies, then the platform will not grow, right? So the platform only has value if others are joining in. And I think that's exactly the place where SWIAT comes in, because we bring those different people together on a regulatory compliant infrastructure. Meaning, for example, we have just shared the news that we got new validators on our infrastructure, Adesso, GFT, Soprasteria, and Think Tank. And they had to provide certain documents to us, guarantee us a certain uptime, etc., and availability of the infrastructure. So I think that's some kind of a revolutionary part that we are contributing in this space. So actually bringing the blockchain ecosystem more into the mainstream and more into the area where you can truly go to scale rather than do proof of concepts, right? Because the revolutionizing potential will only come when we truly scale and get the economies of scale. And I guess that's exactly the part where we are contributing.
Yeah, so I can follow on here. What we see is really we need this really scaling cases. So right now we have a lot of POCs in the market, which is very good, to develop the market. And the next thing we need in the market are scaling use cases. We at Cashlink are actively contributing, as we are the registrar for the most issuance in Germany. We're helping now, I think, more than 30,000 real individual retail users have already bought securities. So we've really ongoing already scalable business in the alternative markets. And now in the public markets and financial institution markets, we're really helping with education, and we're helping with POC as a service, we call it. Because if you roll it out in your organization as a financial institution, you really have you cannot do it from today to tomorrow. You have to roll it out. You have to do education. You have to do a POC. You have to really know the regulatory environment, and then you can go step by step. And I think this step-by-step approach is really important in this market. Because we also are learning every day new things. We are in active contact to the regulator together with our partners. We're in active contact with the government to develop this space further and further. And the more issuance we have as a space, the better, because with every issuance we learn more. And that's why we're also very happy for all the issuance of our competitors, because then the space grows and grows. And as soon as we see the big use cases where really a lot of money is being transferred in this new system, then the revolution begins. Because right now we have two systems in parallel, which is more costly right now, because we need these two systems, the traditional system and the new system. And we will see this shift, and this will happen over the next 5 to 15 years. And we are contributing to make this shift faster.
So at Moody's, our positioning is a little bit different. I would say that what we're trying to do at the moment is very much bridging the gap between the old finance and the new world. What we're looking at today is essentially three things. First off, we're looking at how crypto assets can create risk for established companies. I would say that this was very much top of mind about a year ago, but today, these risks have largely subsided. What's probably more interesting for us now is to provide an opinion on the new type of securities we are seeing on the market. We are seeing stable coins. We are also seeing tokenized funds and digital bonds, which I discussed a little bit earlier today. For all these instruments, there are new sets of risks that we need to analyze so that investors can understand where they're putting their money. And lastly, another important part of our work is to explain to investors what are the opportunities stemming from this transformation. It can bring a lot of efficiencies. It can also transform the business models of the institutional companies operating in the space. And we are trying in our research to explain all these facets.
Well, I guess I have to come clean with something. I don't do anything revolutionary. I'm a lawyer. I do the boring stuff. I actually I'm making sure that you don't have any legal issues. I'm making sure that guys like Michael and Vincent and Jonathan obviously can bring their revolutionary magic when it comes to tokenization. But all joking aside, we have to be aware of the fact that with our regulatory and legal situation right now and with the implications, there's a lot of stuff that's technically possible. We have obviously bonds, we have funds, parts of them, and soon enough with the Future Financing Act, we'll have shares that will be possible. So if you look at that, if we look at that framework, there's actually a lot of stuff that can be revolutionary when you look at like the markets, and that's exactly the kind of stuff that we have to be pushing in that direction.
Yeah, I think that's the point. What's the definition of revolution? If we were 2 years ago and talking about Bitcoin, we would be jumping through a ring of fire and you'll all be cheering compared to our initial start at the panel. So we are talking about a much more mature ecosystem here, Securities. It has been here for quite a while. And the question is there really a benefit with new technologies? Yeah, but if not, be honest, still already working, the system. Yeah? We are not experiencing some magic in here unless in a very specific business case. I think that's the point. And as an association, we do boring stuff, but more on the conceptual, abstract level. And here I think we already can be quite proud of ourselves in Germany that we achieved quite a bit on the regulatory side. I think that's what we could assist the market with. EWPG, our efforts in the DLT pilot, including fund shares, expanding the thresholds. But now it's the time for the market participants to perform and see their individual business case. I think that's where we are right now. So the toolkit is there, regulation is all proper. Now you have to perform as market participants.
Yeah, thank you very much, Tim. There's also a question about this, which Tim mentioned also. Why should we change the securities from traditional to DLT? What are the benefits regarding to the traditional ones?
I can take this one if you want. That will change the order and make things a little bit more dynamic. I would say that on paper, there are many opportunities. The first one is an obvious cost efficiency play. Today, the financial market is quite dated. There are many intermediaries which are often doing the same thing, replicating database that could be concentrated into a single database, doing stuff manually. For all these operations, distributed ledger technology can help a lot. Additionally, there's also the opportunity to provide new services that can be atomic settlement. So in other words, instead of waiting for a few days to have an exchange of assets and cash or assets and assets, you can do the exchange almost simultaneously. You have also the opportunity to provide more information to the blockchain. Today, we can think about price information associated to a token. Maybe tomorrow that could be financial statements, ESG information, you name it. And another opportunity is fractionalization. For many securities today, you need to purchase a certain minimum, like in particular for markets that tend to be relatively liquid, like the credit markets. With fractionalization, you open these markets to a much broader category of investors and hopefully increase the liquidity.
Yeah, and we just had a workshop at another room, and then we had a couple of big financial institutions taking part in, and then we just did a survey, and for most of them in the short term, it's actually cost efficiency. Because if you want to get a budget internally and you have a business case with cost efficiencies in the short to mid-term, then this is driving use cases right now. In the long term, of course, we have so many different services and a different infrastructure and new business models, but short term there will be cost efficiencies. And these cost efficiencies differ a lot from the use case. So in some use cases where we see more, for example, in the structured product space, there are huge cost efficiencies. There are some other use cases where it's only minor cost efficiencies right now. But what we will see is the gap between these two systems, the cost gap, will increase and increase over time. So the potential of cost efficiencies will grow over time, and because also right now what's missing is deliver versus payment. We don't have a real option to have a euro coin. It's in some form. And this will at some point come to the industry and then help the industry to do automatic and instant delivery versus payment. So there will be a lot of more regulation and industry trends and developments that will fuel this cost efficiency. And what we also see is that right now the adoption is still in a POC phase, but at some point it will be exponential. And then we will see the big use cases where we have also new distribution channels. Because if you look, for example, at PayPal, they just bought Curve for 500 million, and they will integrate wallets probably. And it's a question if they will integrate the traditional way of securities as well. Will they have two systems, or will they just stick to one system? I don't know the answer, but it could be that they only stick to one system. And then we will have new distribution channels, which also are fueling the trend to switch to the other system.
Yeah, and I would love to connect to that, because both of that is kind of like highlighting the urgency of why this revolution is taking place. And from at the strategy side, right? As mentioned, I'm as well a lot focused on the strategy element, and in the strategic discussions that we have as well, we see that there is a need to change the way value is created in financial services, because ultimately the customer does not care about your value chain in the back. It's ultimately about the value that you deliver to him, right? And that's as well as long as you have the point of sale, right? There's a lot of power associated with it, and currently banks hold a lot of power in that area. And banks, I think, as well, again, looking at PayPal, once again, right, they realize, okay, there is a threat. Right, and with the blockchain technology now coming in, there is a potential to do what we like to call on the strategy side vertical forward integration. Sorry, backward integration, meaning along the value chain where value is being created, I assume more roles in this creation of value, meaning I just use a decentralized infrastructure, right, where I can ensure that I'm providing my tech stack, where I'm using my tech environment, and I ensure which processes and technologies I want to use and what I ultimately want to offer. But using the decentralized infrastructure ultimately beneath my core offering, I can kick out all the other intermediaries that I used to require to offer my value. Hence, I'm shortening the value chain, and I'm in full control about what I'm offering to my customer. Hence, we see as well that there is a strategic need to do so. And one element, for example, that Vincent mentioned, and I'd like to give a very concrete example on that one, is what we experienced already in a live transaction with Bankhaus Metzler, for example, a few years back, is in the securities lending space, for example. Today, we only instructure free of payment, because you cannot harmonize the different systems of each institution so that only securities are being sent and received, collateral being received at the same time, or that they are going out and in conditionally. Hence, on a blockchain, it's the easiest thing to do, right? So what we did is actually we enabled delivery versus delivery on-chain, and there are a lot of questions coming in with that, right? For the risk department, for the evaluation, well, how do I consider this now differently? And if I then look at all the potential with getting stuff instantaneously delivered, right? And combining all those elements and what impact does this have on my balance sheet, etc. There's just so much drive forward that on a strategy side, we always have all open ears, I would say.
Yeah. Maybe to just add on a very abstract level, one I believe can say is the fact that you have competition of concepts and competition of players that takes place. That's already a benefit. And if you take the traditional securities market, start with the former exchanges, only a handful in Europe, and then you have the real traditional MiFID world, you have the MTF, the different trading facilities. You now have, it's small money, saving money on trading and in the value chain, but at the end, if you talk to professional traders, that's where the efficiency comes in. And if you just see how the development of the traditional markets are, that's what can happen if new concepts and new players and just the challenging and take the central role of certain players if they are challenged, not only being monopolies anymore, and yeah, that might just bring prices down. And it's more an expert view on market efficiencies, but I think that's what for a mature market will take place. Yeah, you optimize yourself.
Just adding to that, you could actually leverage technology, the technology that we have here, rather, to directly cater to what regulation is actually trying to achieve here. Because usually and traditionally, regulation is trying to achieve two things. There's a few other things, but technically it's financial stability and customer protection, investor protection. And you can definitely make the case that you'll use the benefits that are associated with DLT and directly cater to all those goals that regulation has. So that's the actual revolutionary act when it comes to that. You will directly help customer protection and financial stability if you have the right technology, the right setup, the right infrastructure in place.
Yeah, thank you very much. I have a question to Michael. So you mentioned that you already issued a lot of bonds through your platform. And where do you see difficulties, challenges for mass adoption, also for bonds and also for securities?
Yeah, so first of all, the big hurdle for mass adoption was regulation. And this has changed in Germany, so we have now regulatory clarity. It's probably one of the best, for me it's the best country in the world to issue these securities, because we have the clearest regulation. And also now just workshop just recently, the other host said the real innovator are not the startups or the banks, the real innovator is the government, which usually, it rarely happens probably, but in this case really we have a law which gives every market participants the right foundation to act. And so we have managed to do this, and right now what we see is, of course, you have a completely new value chain, and you have to set up this new value chain. And there are many players, also still a lot of players involved, and to have the full value chain is still a challenge. So from primary market, secondary market, custody, securities registrar like us, lifecycle management and so on. And we're getting there, but slowly, so step by step, which is good. And at the end investor doesn't care about technology. As you said, he wants to have a value, and this value can be, okay, you get this product cheaper. This is can be a very good value, or in the terms of alternative assets, you get access to something you didn't have access before, or you have more liquidity as you have before. So we have to provide values at some point to the end investor, and yeah, I think it will take time, but at some point it will grow potentially. Then the next big hurdles will be euro on chain, I think, which helps, and which also helps, but this is really in the long term, is digital identity, because then we have all the components together. Yeah.
Great. Jonathan, I have a question to you. You mentioned about the elimination of intermediaries, but for my understanding, what will happen with these intermediaries? For myself, I don't think that they will get completely eliminated. Which role will they get in this new revolutioning technology?
Well, I think it depends a little bit on who we consider as an intermediary, right? Because there are a lot of entities that could be considered as such. For example, from our point of view, banks as well could be intermediaries, but we don't consider them as intermediaries at risk if they act, because they not only act as intermediaries, but they have as well the transformation activities, right? Some risk and term transformation of capital, and hence they're doing an inherent value offering there. But ultimately, looking at all intermediaries that are just enabling some kind of technical interaction because I'm now having a fragmented world and they somehow allow me to interact with others, I would say if that's the only value add, then they're at risk currently about how the world can transform. And ultimately, responsibilities don't disappear, right? Responsibilities are reassigned. And we see this as well in the German Electronic Securities Act, on the DLT pilot regime. There is always an entity that has to be responsible in some way and has to ensure proper processes and setups. And I think it's about repositioning, right? The challenge is, how do I reposition myself and how do I find my position in the market, considering those circumstances? And is my value offering something that is going beyond just being an intermediary and linking different institutions to each other? Because that's definitely something where you have a blockchain for. Yeah.
Yeah, thank you. Vincent, one question to you about the role of rating agencies in this area. How do you see Moody's, for example, in this position?
Great question. I think the role of rating agencies will evolve. I think they provide a valuable service to investors, which, given where the asset management community is going, is not going away. Basically, with a rating, you provide transparency on certain number of risks. With digital assets, there are new risks that are crystallizing, and that means that new assessments or different assessments are required. So that's the important thing to consider. Beyond that, I would say that the way we deliver rating is going to change as well. Obviously, if everybody starts putting information on blockchain where securities are traded, then rating agencies will need to adapt and, for example, provide ratings directly on the chain instead of publishing press releases. So that's the first example. Another way intermediaries like rating agencies will need to adapt will be by making or providing their services much more quickly. Today, when we provide a rating, usually take 3 to 4 weeks to review the documents, meet with the company, do the analysis, convene a committee, and so on and so forth. But if the market is moving faster, if bonds are distributed to investors in a matter of days instead of weeks, then rating agencies will need to follow, and instead of putting ratings out within, let's say, nearly a month, we'll put a rating out in nearly 10 days. I think that's definitely doable. We've actually started to work on the process. Ultimately, our goal is to serve investors as best as possible.
Thank you very much. Fortunately, we only have 4 minutes left. I have a lot of questions left, but I would also like to ask the audience if you have any questions that you want to ask to our panelists. Please. If not, I have enough questions to ask, so please.
It's for Moody's.
Yes.
Okay, so I would love to hear what's your approach, because obviously 3 years ago it was not so easy to see incumbent banks taking this space. Now we can see there are many incumbent banks or traditional banks that are analyzing the opportunities. So from Moody's perspective, what is the approach regarding these traditional banks in terms of a risk profile? You see this approach as important opportunity in order to introduce more liquidity and as a consequence of that, more efficiency, or you see these incumbent banks assuming more risk than in the regular basics?
Great question. The good thing is that banks are regulated. The Basel Committee put out some guidance a few months ago, and in those guidance, it says quite clearly that exposure to crypto assets like Bitcoin are going to require a lot of capital, and implicitly those requirements have been made so hard so that they're going to deter banks to take an exposure that may be too large, and I think that's a good thing. That's a good thing for financial stability. On the other hand, the Basel Committee has not decided to impose a higher capital requirements on activities related to the development of new blockchain-based infrastructure. These requirements are going to be assessed on a case-by-case basis by each jurisdiction, and we think that it's encouraging. It's going to encourage innovation, and ultimately, as I think those various sessions have shown, we need to have financial institutions on board to transform the financial system. When you talk about money, money is about trust, and if you look at the existing financial world, you build trust by being around for years, decades. The JP Morgan, the Goldman Sachs, and the likes, they've been around for decades, if not more. And I think that there's a certain merit to this conservatism here. So, in a nutshell, to wrap up, I would say that the transformations we are seeing at the moment are not increasing the risk profile of banks.
Thank you.
I think maybe to add quickly to that, so the interesting part is as well that BIS, has set out a framework that is easy to follow, I would say, or easy to check, at least on a high level, right? Then definitely if you dive into it in detail, there might be still a few questions open, and I think it's in the third consultation phase right now. But what is as well interesting there is that they highlight as well that you have to look at all dependencies that you get into the financial institution, meaning as well the blockchain infrastructure itself, and not only the use case or the application that you want to use or the asset that you want to move, that the infrastructure itself, since it's decentralized and you have more dependencies on more actors, has to be quite carefully monitored, and hence has as well the threat that even if you use a tokenized security on a blockchain, if it's on the wrong one, you might have additional risk requirements and capital requirements to it. So I think that's definitely something that we will have to iron out somehow in the industry, and which as well shows how far we have come in the revolution towards mainstream, since we are tackling all those left pieces that we haven't discussed yet.
Yeah, thank you very much.